This is Duke University.
Impact investing is exciting because now, through the efforts of lots and lots of people, we've all earned the right to screw this up. And what I mean by that is that there's been so much success at building momentum, building attention, demonstrating models, that now the world is focused on this in a very real way. I mean, there's a G8 task force on impact investing, which had someone told me that a few years ago, I would have thought that they were joking. But what that means is we're kind of like the kid that's been asking the coach for an entire season, put me in the game, put me in the game, put me in the game, and now we're in the game. And so what's exciting but also daunting is now we all have the chance to execute, and it all comes down to how well we do it. What we deal with on a day-to-day basis in our business is there is more work to customize and integrate with very specific client situations, so more labor-intensive and customization-intensive on the client side. Some of these are newer sectors, newer themes, so it's more research-intensive. There's not a whole built-out universe of intermediaries, so we get less help. And along the way, no one pays a premium for it. So take something that is more labor-intensive on the client side, more research-intensive and executionally intensive, where there's no price premium, and we as a group, as an industry, have to figure out how do we make that work, where the answer isn't we just do a shoddy job of it. You know, how do we deliver at institutional quality something where it has those kind of fundamental headwinds that make it hard to do it with the rigor and quality it needs? There are some pieces of this work that are mainstreaming and will mainstream relatively quickly. So public markets impact investing, we're seeing that it's going to be a price of entry for an independent wealth management firm, an asset consultant, or a private bank to be able to offer strong support for building impactful portfolios of public securities. That's going to mainstream, and the current engines of investment are well set up to do that scalably. And that's not something that we're going to have to worry a lot about. And then there's some very small idiosyncratic early stage stuff that is going to kind of always be ad hoc, going to always be tough, and people are finding ways to try to organize that, communities of angels, crowdfunding, other things. But all this stuff in the middle that looks to the mainstream financial world like lower margin, really annoying work, but is what people who care about impact really care about, that's where we need some really clever chunks of intermediary infrastructure to make that possible. Because saying large institutions, I want you to go make lots of bets on small early funds, it's not going to happen. But we don't want to give up on that either. And so we need to find a way to do it properly, and that means more intermediaries, more boring, unromantic businesses like ours, hopefully, duking it out to do a great job really serving those needs. In phase one, the term was invented to give a branding pivot from SRI, open the eyes of a whole host of other people and make this seem cool. And I think that's been accomplished phenomenally successfully, and I've gotten to be a great observer of that, and just gotten to see how successful that effort really has been. I think in some ways the next challenge is a little more segmented, and so success immediately is to focus on the more directly segmented executional bits and pieces we have, where getting large institutional investors to put big chunks of capital are very different from getting truly impact-oriented investors to get really good at that craft. Those are really different projects. So step one is recognize what the problems we're solving are in a more refined way, and then solve them. This is harder than it looks, because a lot of people think, I'm an investor, I know how to invest, and so I'm going to add this other bit to it, and that part I can learn and no problem. And sometimes other people say, look, I get impact and I worked really hard, I got my MBA, I know finance, and I can kind of bolt that on. And I think the reality that we've seen is it's harder than anyone thinks. I don't know that we've had anyone we've hired in our entire history that has shown up and said, yeah, I got it. Every single person at some point, whether it's day one, week one, month one, has come and said, this is harder than I thought. And what it is we're all building this bicycle as we're collectively riding it, and it requires a flexibility, a nimbleness, an ability to make decisions amidst uncertainty, a lot of those softer, more adaptive skills, as opposed to those functional skills. Functional skills are a commodity. I think we can go find people that can build great economic models, all those different pieces, but who can cope with figuring stuff out that hasn't been figured out before? Who can cope with lousy data when we still have to make a decision? Who can do that? I think it's more of those intangible skills, and for a lot of it, it's people with proven records of success that have shown they've dealt with real situations, with real organizations, with real problems, that have had that real experience of having accountability for something. And one of the pieces of advice I give a lot of people is, they say, what should I do? I say, I almost don't care what you do, but really do it. Find an opportunity that gives you a chance to sink your teeth into something where you have accountability to deliver in all the messiness and complexity that entails, because that's what's going to train you for this field.